Welcome back to the Stocks Update. If you're into electric vehicles, the stock market, and all things finance, you're going to want to stick around for this one. Today we're diving deep into Lucid Motors, and trust me, it's been a roller coaster. Now, despite Lucid's stock dipping about 3.3% after hours, it actually managed a modest gain of 1.29% earlier in the session. In the grand scheme of things, that's not too shabby, especially considering the wider market was in freefall. The fear and greed index is showing extreme fear, and market sentiment overall is shaky. You'd expect stocks like Lucid, which usually take a harder hit during market downturns, to be down even more. But that wasn't the case here. Usually, when the broader indexes tumble by 3%, Lucid might drop by 6% or more, but not this time. Today, Lucid held its ground. At one point, it even traded in the green, which says a lot about the underlying buying pressure. Over 212 million shares changed hands today, nearly double the average daily volume of about 107 million. That kind of activity signals a fierce tug-of-war between buyers and sellers. But here's where things get really interesting. Massive capital flowed into Lucid today, and not just during regular trading hours. In the after-hours session alone, we saw multiple trades over $100K, each many of them repeating the same price point of $1.16, suggesting algorithmic or institutional activity. For example, one trade alone was worth $2.62 million, so clearly, big players are making moves. The dark pool data also shows heavy action. Dark pools are often used by institutional investors and hedge funds for large transactions. These kinds of trades don't show up immediately on public exchanges, but the numbers speak volumes. Several trades ranging from $1.7 million to $5.9 million took place, especially around lunchtime when Lucid momentarily spiked into the green. What's driving all this interest? Strangely, there wasn't any major news from Lucid itself. No new product reveals or official press releases. But the buzz on social media and forums pointed to a potential partnership, possibly with ChargePoint. Let's unpack that a bit. EV content creator Kyle Connor posted a video of himself heading to ChargePoint Labs to juice up a Lucid Gravity vehicle. Then, ChargePoint dropped a cryptic comment in response. On top of that, Nick, Lucid's head of communications, added fuel to the fire with a subtle eye emoji tweet. Sounds like nothing? Maybe. But longtime followers of Lucid will remember they cut ties with Electrify America a couple of months ago. So, the timing of these interactions is suspicious, to say the least. To me, this suggests Lucid could be actively pursuing new infrastructure partnerships. In fact, during the Q4 earnings call, Lucid's management hinted at multiple collaborations without giving specific names. Could ChargePoint be one of them? Maybe. It might be a strategic play to enhance their charging ecosystem and go toe-to-toe with Tesla's supercharger network. That said, it's not all sunshine and rainbows. ChargePoint itself isn't exactly thriving at the moment. The company has had its fair share of struggles, and any joint venture between two underperforming firms carries significant risk. Add to that Lucid's recent convertible note offering, and the financial picture gets murkier. Still, if this partnership materializes, it might offer some short-term hope or long-term infrastructure advantages. Let me know what you think in the comments. Is this a smart pivot or a desperate move? Now, let's shift gears to short interest, and it's a doozy. Short sellers increased their positions by 7.68 million shares, now representing 23.92% of Lucid's free float. That's a 2.71% jump in short interest, bringing the total to nearly 291 million shares sold short. That's a lot of bearish bets. It suggests investors are bracing for more pain or trying to suppress a breakout. With all this going on, why are institutional investors pouring in money at the same time shorts are increasing their exposure? It's a bit of a mystery. Could be a divergence of opinions, or maybe someone knows something the rest of us don't. Let's take a look at the options data. On the day, we saw 4.8 million call options versus 6.18 million puts. That translates to a fairly even sentiment split. 50% of options were bearish. In one 5-minute window alone between 9:20 and 9:25 am, over $923K worth of premiums exchanged hands. The options activity paints an intriguing picture. There was a multi-leg strategy in play, likely a bearish vertical spread. It looks like someone bought a $2 put, sold a $1.50 put, and then added another $2 put, possibly to hedge or double down on a bearish position. These types of complex trades are usually executed by sophisticated traders or institutions. What's the market saying about Lucid's future? Based on current options contracts expiring between June 2025 and January 2026, bulls are aiming for a rebound above $2.50, while bears are targeting a drop below $2. So there's clear uncertainty and split expectations here. From a technical perspective, Lucid closed at $2.32, just below a critical pivot point at $2.33. That level will be important to watch in the next session. If the price can hold above that pivot, it could indicate bullish momentum. Conversely, if it fails to break through, the stock might struggle to gain traction. Key support sits at $2.11, and resistance is around $2.55. There's also a 50-day moving average around $2.56, which historically acts as a strong swing level for Lucid, sometimes triggering moves of up to 30%. That might be why short sellers are getting aggressive, trying to front-run a potential breakout. As for analyst activity, no new ratings yet. But given that Lucid recently shared updated delivery numbers, we might see some fresh coverage or revised price targets in the coming days. To wrap it all up, here are the key takeaways. Lucid held up surprisingly well despite a brutal day for the broader market. Massive institutional buying, especially through dark pools and after-hours trades, suggests something's brewing. Short interest has increased dramatically, indicating a battle between bulls and bears. A possible partnership with ChargePoint is being teased online, though nothing official has been confirmed. Options data shows split sentiment, with large complex trades hinting at uncertainty. $2.33 and $2.55 are key technical levels to watch, while $2.11 remains a strong support zone. Potential analyst updates could shake things up in the next few trading days. So, what's your take? Is Lucid staging a quiet comeback? Could this rumored ChargePoint partnership be the catalyst it needs, or is it just noise? And what do you make of the surge in short interest? Are the bears right? Or is this setting up for a short squeeze? Drop your thoughts in the comments. If you found this video helpful, please give it a thumbs up and consider subscribing to the channel. Your support helps us continue to bring you in-depth market analysis. Thanks for watching, and I'll see you in the next video. Take care.